Welcome everyone. So Robinhood went public and started trading on July 29th, and since then we saw some crazy price jumps all over the place. So in this video, I'll share what I did to take advantage of this momentum and my opinion on where I see the stock in the short term, and we are starting right now. So the last stock in which I really felt like I had to get in at the IPO was Facebook. And I did get into the IPO, and I was feeling really proud that I'm one of the lucky few who got into the Facebook IPO, which was because it was really hard. But my pride was dusted down to floor when the stock plummeted to $18 from $38 just a few days after IPO. And my friends were making fun of me as they bought it cheaper than what I did. So here, look at the screenshot on when I bought Facebook, as I still hold these shares. So you can see that I bought at an expensive price, IPO price of 38, but if you look at it today, it's not that bad. But some of my friends actually got in at about $18 to $20. So that stock taught me that FOMO, or fear of missing out, is really a bad thing in stocks and actually one of the hardest things to master. Even the most experienced traders will fall in this trap. So after that, I stopped investing in IPOs, and it has paid me well, let it be Coinbase IPO or the stock we are discussing today, which is Robinhood or Hood. So now I'm going to share my screen and I will show you how I traded Hood in this market. And I will show you some of the trades that I have already made and some of the trades that I still have pending. So Hood started to trade in the market on July 29th, as I mentioned before. So when I got an alert that Hood was trading on the platform, I just watched the ticker and saw the stock price jumped all over the place. I was sitting patiently on the sideline as I knew I will get my chance once the FOMO settles down during the first few hours. It's really hard, trust me. I was struggling all day. So then a day later, of course, I didn't jump in on the day of IPO. A day later, the stock started to pick steam, and in front of my eyes, it goes to 100% right here. Robinhood surges 50% in the second day and almost 100% up that week. So now FOMO is really settling in, but then I asked myself, would I have sold it? The answer is no. Look, I still have the Facebook share that I originally bought on 5/18/2012, and I haven't sold a single share. So I wouldn't have sold it. So then it's not that bad because again, it's all paper gains. So then I started to look at other ways of making money by taking advantage of this momentum. So what I did was, and I'm going to share that, let me show you a simple spreadsheet of the plays that I made on August 4th. Now, here is on your screen is a simple spreadsheet. So as you can see on your screen, that what I did was on 8/4, again, all the trades, just forget the top one. I'm not going to discuss that right now because I'm going to cover this again later. So just focus on these ones right here. So on 8/4, I sold cash covered puts for $40 for August 20th, just 2 weeks out. Okay, and I basically sold 100 of those contracts at about $2.20. That was my sell price. That means I got paid $2.20 for each contract for selling that. So in total, I received about $21,948.46. Then what I did was just a few hours later, all on 8/4, if you see over here, okay? Just a few hours later, because stock was all over the place, it was going up and down so fast that it was hard to keep track of. And that's where it really comes in, that you need to be very, very careful on when you're making trades like this. Again, my opinion only, entertainment purposes only. But when you are in a stock like Hood and the stock is so volatile, you want to be able to get in and out quick. There's no time for holding it thinking, you know what, let me make a little bit more, let me make a little bit more. No, because that's what ruins it and that's what kills your profit or gains. So what I did was, just few hours later, I actually bought all of them back right here, all 100, I bought it back. So then I basically ended up selling at like different prices or buying back at different prices right here. As you can see, from 110 to 175 to all the way to $2. Now, by doing that day, I made about $4,072.24 by playing these options right here. Now, in my opinion, again, my opinion only, this is the best I could do that day with the stock. Yes, I could have made more money if I would have held on to it, because again, this $1 or $2 that I bought back actually went down to like some cents because the stock just went up like crazy. But that's not the whole point. The point is to take advantage of that momentum because it could die at any time. The stock could come down and I could lose all the gains. Okay, so from these gains, if you change it back into the stock, so let's assume that I had bought 100 shares at IPO for $38, hypothetically speaking, and to make $4,000 from that investment, I have to sell those shares at 78. And look where the stock is sitting right now. Because a day later, we get the news about insider selling right here. Robinhood retreats, monster rally because stockholder filed to sell 97.9 million shares. And that is why I feel like IPOs are overrated, it's too risky to get in, and then that FOMO really kicks in and you end up losing. Because who knew that this news would come out the next day? You know, the stock was almost touched $85, but who knew that this news will come out and will ruin all the gains and the stock is down to like in 50s. Now, again, this is just a short-term stuff that's going on. This is all going to settle and we may see the rally, and I'll show you how. So from here, I want to show you something else. So there is another proof why IPOs are tricky and why most of the major investors stay away from IPO for few days before they start buying. Again, those who bought it pre-IPO, they are of course big whales, they bought it, but there are many more major institutions, those who are just sitting on the sideline. So let me show you the inflow and the outflow of the stock. If you see over here, the inflow is right here on this side, and outflow is right here. So as you can see, small and medium are about 25.43 to 23.72. The large inflow, barely, very minimum. And that is where it shows you that people, those who are, or the whales, those who come in and buy the stock in like millions of stocks at a time, they're not trading right now. They want the stock to settle down a little bit because it's too volatile right now for them to take advantage of that. And that is why if you see outflow, all the outflow is also a small and medium. It's literally $0 or 0% outflow because those 0.27 are holding on. They're not selling. They're not in it for the short money. And that is why I feel the volume is going to go up a lot more in the next few days. Again, making the stock go crazy again once this news settles down. So in my opinion, Hood will be fine in the long run, and based on that, let me show you my next trade. So looking at the chart right here, as you can see, the volume was all over the place, as you can see over here. Volume was all over the place, and of course, the MACD, the RSI, it's too new. We can't really see all these things in the stock, which is just so new and just started trading. So we really can't focus on those fundamentals. We just have to see what the company is doing internally, how the market is reacting, what is the sentiment. So in my opinion, in the long run, again, I'm not saying next month, I'm saying in the long run, maybe by 2 to 3 months, the stock will settle down and will climb up because they have so many members and they have so many accounts that have signed up. And they don't charge anything. And I always tell people, when they are not charging you, then you are the fee. Because the data that you are giving them is so valuable that they are making millions of dollars on your data. So I'm not too happy with the whole GameStop saga that happened back in Hood, but believe it or not, right at that time, and you can see, their membership rate grew like crazy because people found out about Robinhood more and more during the GameStop time that, hey, this is when they can go and buy the GameStop, or they can actually buy the fraction shares on Robinhood. It became so popular, even though it was a really bad time for us investors, or I use Robinhood. I was really pissed off. It was really bad time for us investors to be in that situation. But again, Robinhood gained huge popularity during that time. And of course, nothing is free. There is no free lunch. I don't believe in that. So you and I are their data that they're selling, and they're making so much money. So big institutions are behind it, and I feel they're going to come in when this news settles down. So what I did was, knowing what I know and seeing what I saw on just a few days of trading, I did another trade. So what I did was, and it's right here actually, as you can see, I actually sold 100 more puts for December this time. So I went up 4 months out, and I sold December puts right here, a strike of about $40. That means I am betting that by December, if the Hood is $40, I will buy 10,000 shares of Hood. But at that time, for this bet, I got $7. Okay, so let's say that in December, this Hood is actually $40. Let's say that it didn't go up. Now, I'll be obligated to buy Hood because I placed that bet for $40. But my cost is actually $33 because they paid me $7 in advance. So actually, I will be buying Hood for $33. Now, don't you think that's a better deal than getting in on IPO at 38? In my opinion, it is, and that's why I played this. Because again, I feel that Hood will be worth a lot more than 40. by the time December comes in, because they will have their earnings out, the dust will settle down, and all the institutional investors is going to come in. So I feel that the price of the hood will definitely be more. So looking at the trades and where the stock is sitting right now, chances are that hood to be $40 in December are slim. And that is when I will get to keep the full amount if I hold the contract. So basically, let's convert this into stocks. So if I were to make $70,000 in profit, as I got for selling those 100 puts. So let's assume that I got in at IPO and I got assigned 1,000 shares at $38. So for me to make that kind of profit, I have to sell those 1,000 shares at $108 a share. So you see, by December, the chances of hood being 108 are very slim. The chances of hood remaining at $40 are also very slim. So I'm playing that gap. I'm playing that range that if hood is over $40, I get to keep the money. I don't have to wait for it to be $108 for me to make that money. I can make that money when the hood is even at $50 or $55. So you see that how sometimes avoiding IPOs is not a bad idea at all, because it does open up your thoughts on different trades. So I'm going to link a video that I did on cash covered puts right here. So please do check it out, as it does explain the puts step by step, which in my opinion is one of the best plays you can do in today's market condition, because we don't know where the inflation is going to be, where the interest rate is going to be, and what market will be doing in the next few months. So I hope I provided some value. That is always the goal. And to support our effort, please do click on the like button, subscribe, as it does help a lot for our small channel to go out to more viewers. Love you all. Thank you for watching. Until next time, you all have a sparkling day.